let's get into the trade now, and let's look at what people are watching out there today. NATO summit, allies are moving to counter Russia and bolster Ukraine. Jerome Powell saying the Fed will cut rates when ready, regardless of political calendar, and Japan's key capex gauge falls again, clouding the outlook for sustainable recovery. And oil has settled higher on hopeful demands for outlook as US oil stocks sink, and the EU farming group sees soft wheat crops falling. Let's get into some of the charts ahead of a key read on inflation out of the States tonight. Joining us is Nick Twidale from ATFX. Nick, good to see you.
Thank you.
Yeah, of course, markets are waiting on that data tonight for June inflation read off the back of that testimony we heard from Jerome Powell, which, well, do you really hear anything new from him?
We didn't. No, he didn't give us anything, did he? And I think that's been a bit of a disappointment. Investors in the US clearly took it as in their usual, which seems to be 2024 glass half full approach, and stocks went higher. But for currencies, we didn't see much of a move, and I think that now brings this CPI data tonight into even greater focus, if that was possible. And we've got some currencies sitting at good levels as well for trading. Probably later on, we've probably got to get through the Asian session and then most of the UK session before we then see that data drop, and then I think we'll see some moves.
All right. So, well, how market moving will be that inflation read, and what are we likely to see with the US dollar? Because it sort of hasn't really gone anywhere the last couple of sessions.
It hasn't. No, we've sort of had a decent break to the downside against a few currencies, cable, euro, and a little bit of a move in dollar yen. But I think it's going to have even more of an impact than previously we may have thought at the beginning of the week, because Powell's testimonies were kind of damp squibs, really, weren't they? So I think there's a couple of interesting facts we could take into consideration from the last couple of days. They don't come from the US Fed. I think they come from the RBNZ yesterday, who came out a lot more dovish than expected from the market.
Well, in fact, why don't we start with the Kiwi dollar then, and what we're seeing off the back of that decision by the RBNZ to leave rates on hold, which was expected, although the commentary was perceived as being somewhat more dovish than expected.
It was, yeah. There was a lot of people, the expectation they were going to remain strong and relatively hawkish, and we got that really nice sharp move down in the Kiwi. Now, from a trading perspective, I've probably brought up the wrong chart. We probably should be looking at Aussie Kiwi, but I didn't throw that out. But against the dollar, we're sitting in mid-range for Kiwi, but you know, a weaker CPI print will probably completely dominate what we saw yesterday from a dovish RBNZ and take us back close to that sort of that 61.50 and challenge those resistance at 62 cents. I think the risk across the board in all the major currencies is if we get a stronger print. And the dollar suddenly, you know, takes off this trend that we've seen over the last couple of weeks with weaker US data that's pushed forward that September rate cut expectations. So,
all right, well, let's move on to the Aussie then, because it has strengthened, certainly off the back of prospects that the RBA could in fact hike rates at the next meeting.
Yeah, so I think that's the Aussie is probably one of the better majors to be looking to trade on the back of this CPI data. A weak print should see us break that, and that's been like a good resistance now that's come in. We got a nice break through 67 and then didn't really go anywhere. But I think if all things remain equal, or we get a lower print in the CPI data tonight, then it does break to the top side. We do see 68 cents, and then as always with the Aussie, there's a lot of options demand around the 50s and the big figures. We'll probably cap out 68, maybe 68.50, but it is all going to come down to that data, and we have got a more hawkish RBA set up, and maybe we do get the rate hike from them, and you know that really does throw the cat amongst the pigeons from a currency point of view, where everyone else is looking to cut rates.
Indeed. Let's now, of course, elections have come to the fore, because we had the UK election and also the French election. Let's take a look at the pound. What are you seeing?
Well, the pound overnight we got a little bit more of a more hawkish bent from the MPC's pill. We're on the euro chart there.
I know. Let's try and get the pound up. There we go.
And there's the pound, right? So that did drive us higher. So not too much. We got 50 points out the pound. But as you can see here, this is a much longer dated chart. If we do see the weaker CPI and we've got a slightly, I suppose, less keen MPC to cut rates, we could see a breakthrough to the top side, and that could open, you know, over the longer term, that could open the way up to that 135 level, certainly to challenge those highs from Q2 2023. And I think this is where we're going to see we'll start to see some moves. We are seeing those interest rate differentials kicking in now, and I think tonight's, it goes back to this CPI data. I think the fact that Powell was so quiet, it brings on an extra impetus for us.
Yeah.
And if we do see what tonight's, it could lock in that September rate cut, and I think if we get that, we do see the dollar take that extra step lower, and probably the Aussie and probably the sterling are the favourites to get some decent moves out of them.
Let's take a look at the euro, which we just had up, but we did see a bit of movement there out of the French election. But is this now more really about where the ECB is going to take rates, given it's now in that cutting cycle?
I think so, yeah. So it will then become a competition of who's going to be cutting quicker. Will it be the Fed? Will it be the ECB? Euros had a nice little run up. I think we're around about 104, 108.40. Yeah, but there you go, 108.33. Similar setup that we've got to cable on these longer term charts. If we do see that CPI, and I think we want to see the year-on-year number come in beneath 3%, which is obviously what we know the Fed's looking for. If we see that, it allows euro to take that step higher, it allows cable to take that step higher. But I think you're going to get more bang for your buck from cable and Aussie at the moment.
What about the yen? It's gone a little quiet, hasn't it? Because we've seen this, been distracted perhaps by the others. But that US dollar pair, how's it looking at the moment?
I think this is the other big trading opportunity tonight. Is if we do get a stronger print, which I do feel is the risk for the CPI, it takes us back to those highs. We capped out at 161.82 last night. 161.99 I think was the high. We feel that 162 is a bit of a line in the sand, but it's going to be about the pace of the move. If we get a stronger move up and it takes us through there, then I think we're back talking about intervention again. Whereas it's gone a bit quiet. We all got very excited a couple of weeks ago. Bank of Japan, again, I think are desperate to see a weaker number come in and see us take us back down into the range. It worked for them back in April. And I think they're going to hope for it to work for them again. So I really think the Bank of Japan want to see it come out on expectations. So 0.1 for the month on month, 0.2 for the core month on month, and 3.1 for the yearly stuff. If not, fundamentals do push that dollar yen back higher. And this could be the one that gives it the pace that may see them have to take some action later on today. All
right. Plenty of opportunity there to trade. Nick, thanks for joining us from ATFX.
Thank you. Cheers.
All right, and that is the trade on this Thursday.